Hello everyone, myself Vaibhav. In our today's session of Visual JForex, we will be getting to know the indicator named force index. This is an oscillator indicator which can be used to see whether there is enough momentum in the price action which we are seeing. So this indicator is derived using the price action, the difference between the closing price for the current candlestick period and the prior candle close, and we then multiply it with the volume to derive the price. Here we don't really have the description for force index, so we straight away head to the Visual JForex board developed by Dukascopy Bank SA. Here I have included the formula for calculating the force index. It's fairly simple. All you have to do is take the closing current period price and then deduct the closing price for the prior period and multiply it with the prior period's volume, and that's how you arrive at the force index for one candlestick period. And then if you want to use it on the last 13 time period, then you have to take the EMA of the individual force index values. So here when we use it on the larger time frame, we simply take the EMA of it, and not only EMA, we can change the moving average type. So basically it's about the calculating the moving average of the force index for the given period of time. Here this is the indicator block. For today's session we will be using the on candle as our start point. Then we will see how to define these values, the five parameters, to arrive at the most opportune entry and exit points using the force index indicator. Here first thing first, you have to define the default instrument. If you want to change the instrument to different one from the Euro USD, all you have to do is go to this list and pick any instrument of your choice. In today's session, we will stick with the Euro USD, so I'm not making any changes here. Then coming to the candlestick period, how much should be the candlestick period is of course the function of the time horizon. If you want the big trades, the swing trades, then I think the time period like 4 hour to daily are better. If you want to trade on the lower time frame for more of scalping opportunities, then time frames like 10 minutes or say even half an hour or 1 hour is good enough. So that's how you have to decide what is the time period is which time period is more appropriate, and that is basically going to be dependent on your horizon for the particular trade. Here I will add the force index. So here it is. Now as you can see, this force index is being calculated on the 21 candlesticks. We will restore it to the default value of 13, and then I will explain to you the underlying logic here. As you can see, the force index is being calculated on the Euro USD with the time period of 1 hour each for last 13 candlestick period, with the MA type being SMA. And as I said, we can always change the MA type, we can change the time period for the calculation of the force index, and we also can change the applied price, whether we want closing price, high price, open price, low price. So depending on the requirement, we can choose these parameters. First, I will explain to you what are the general characteristics. The force index is an unbound indicator. That means there is no fixed cap on the higher side or on the lower side. The basic assumption is that the value above 0 is indicative of the positive, the bullish momentum in the underlying instrument, and the value below 0 is indicative of the bearish momentum. in the underlying instrument. If the values for the force index are rising, that means the momentum is gathering pace and the strength of the trend is actually increasing on the bullish side. And if we see that the force index values are going deeper in the negative territory, then that means the bearish tendency is gaining strength and it's fairly strong, and we will do better, we will do well to stay on the side of the trend. So many a times, what we can do is that simply look for the change from one side to another. If we see that the momentum has shifted from being in the bearish territory to bullish territory, we can think about going in for a fresh trade on the long side as the bearish tendencies are subsiding and the bullish tendencies are gaining foothold. We can think about going in for the fresh buy trade. And when we see reverse is happening, when we see that the bullish tendencies are now coming down, and rather the bears are trying to take control as the force index is dropping below zero from prior positive territory, we can think about going in for a fresh sell trade. So that way you can use it, or other way to use it is when we see sudden spike in the force index value. It's pretty difficult to quantify what is the sudden spike. As I said, this is an unbound indicator, so there is no general band which can act as an cap on the lower side as well as on the higher side. So because of that, we have to basically see and compare the output values for the force index, whether the values are on the positive side, whether the values are increasing or decreasing. So that's how it works. Then coming to defining these time horizon, we can lower it to 30 minutes. We can use the lower time frame of 15 minutes as well. So here, depending on the requirement, if you are looking for the shorter time horizon trades, then using the time frames like 15 minutes or 10 minutes is more appropriate. And we can also do the change. We can also change these other parameters to say larger time period for calculation of the force index. We can increase it, for example, to 30, and the force index calculation will be a lot different when we are using the larger time frame data. As you can see here, after long consolidation, finally the force index dropped in the negative territory somewhere around 3 GMT, and prior to that it was simply in the consolidation phase, and during the consolidation phase the force index values were going down. That means the momentum was subsiding, and then eventually we saw the break on the lower side. And here you can also bring in other indicator which will help you in finding out the appropriate trading strategies. If you want to go for the entries, you can define that with the help of this indicator. If you want another indicator which will confirm for the underlying trend, you can also do that, or you can even simply rely on the single indicator while taking different look back periods and then comparing the values over a period of time. So that way also you can use this indicator. So let us define the characteristics which are likely to prove the which are likely to prove more profitable, but you will need to of course do a lot of testing, and this is only for the representative purpose. And here we get all these options starting from 10 seconds to the month, and as per our requirement we can use these input parameters. Shift is the look back period, whether you want to take into account the current value or the prior values. You can take that simply by defining the shift value. If the shift is 0, that means the current output value for the force index indicator will be taken into consideration. If the shift is say for example 5, then we will be going back in time by 5 candlesticks and taking the output value for that candlestick. The time period is the period for calculating the moving average of the force index. The shorter the time period, more whipsaw moves might take place in the force index output value, and the larger the time frame, we will not really see such sharp moves, but there will be lag, as this is the lagging indicator, as we simply rely on the historical data, the price action and the volume. And then if we use the larger time frame for the MA type, then we will not really be in a position to identify sudden swift changes in the trend of the underlying instrument, as we are looking at the lag, and it will take time, and sometimes it might happen that the price has moved a lot before the change is being reflected in the force index values. Then coming to the moving average type, here we have all the options listed which can be used to define the moving average type: the SMMA, LWMA, HMA, T3, all the way to SMA. Let us see what kind of changes are visible when we change the SMA to different moving average type. For example, SMA to KAMA, and here the KAMA is showing a great deal of difference compared to what we were looking when using the SMA. Here the Euro USD chart has been plotted on the half an hourly time frame, and looking at the force index values here, we can see that the force index values has dropped from bullish territory to bearish territory somewhere close to 3 GMT. That is when this fall began, and now the force index values are going down only while being in the negative territory, which, as I said, is indicative of the fact that bears are strong, bears are holding well, and this downward price move which we are experiencing now can't really be said anything on that, how long it will continue, unless and until we see the reversal in the force index values, and only when the force index values again come back in positive territory, we can say, while using this setup, that the momentum has changed from bearish to bullish. So this indicator will keep you on the side of the trend. This is fairly good, but as I said, one drawback is that there will be lag because of the nature of the calculation of the force index value. So now let us go back to the indicator block. Here we have defined all the 5 input parameters, and as I said, we can use different applied prices, and we have here multiple options for calculating the output value for the force index. The one thing is that first we have to use the applied price for calculating the single periodic force index, and then the another applied price is here simply because of the need to calculate the moving average, and then second time around again we have to see what is the required closing price, or which is the required closing price, which will help us in pinpointing the most opportune entries and exit. So here you can make all these changes which are supported and provided as option here, and then whichever suits your purpose, you can change the applied price here, input parameter, we can change it, and you please observe the change in the plotting of this force index. If I choose low value, there is a change which is fairly visible in the output value for the force index. Low price, if we use typical price, there is a minor change. Again, if we use high open price, we have the difference in the output value for the force index. We can change this also. If you simply go back to the EMA, this is how it will look on the hourly time frame for Euro USD. So that's it from my side for today's session. I would suggest that you try out these various combination, and see what is the probability, how likely is the trade is to end in profit with different setups, and then whichever is the promising setup, you can think about going in for trading on the live account with the help of that setup. So on that note, I am taking leave now. We will be back tomorrow with a new indicator block. Till then, have a good time.